Welcome to the CU 2.0 podcast.
Hi, and welcome to the CU 2.0 podcast with big new ideas about credit unions and conversations about innovative technology with credit union and fintech leaders. This podcast is brought to you by Quillo, the real-time loan syndication network for credit unions, and by your host, longtime credit union and financial technology journalist Robert McGarvey. And now, the CU 2.0 podcast with Robert McGarvey.
Here's a fact. Youth banking is the entry ramp into a credit union. Fact 2, credit unions, most of them will admit that youth banking is not exactly their strongest suit. Enter Cardinal Credit Union, a Mentor, Ohio-based institution with assets around $335 million, where CEO Chistine Blake says they are winning big and attracting youth to get credit union accounts by doing a lot of innovative thinking and mixing in fun activities. Blake, by the way, is a past podcast guest in episode 342. There's a link to that in the show notes. She talks about the institution's relationship with the Cleveland Browns and the credit union's Little Brownies debit card aimed at kids. Since then, she's turned to Nuuvia, formerly Incent, where President Marcel and team have developed a range of youth banking tools and ideas. King, too, is a past podcast guest. He was on episode 360 with Pioneer Federal Credit Union EVP Tracy Miller, where they talked about youth banking. On this episode, King and Blake dive more deeply into what youth banking is about, and specifically what Cardinal is offering, why kids like what they see, and why all of this matters in helping to ensure a credit union's long-term success. In the process, King shares compelling data on youth banking at Desert Financial, a big credit union in Phoenix, Arizona that's getting some terrific results. Listen up, you'll hear the numbers. You know what? I was looking at your website. One thing that you have that intrigues the hell out of me is what's this madness game where...
Oh, love the Mad City.
Mad City. Yeah, tell me about that because... Yeah, and at what age group is this for?
That we do it mostly for our high schools. It can be any age group. It could be middle school and high school. There's different versions of it.
I wish I'd had a class like this when I was a senior in college.
I love this one. This version that we do for high school, we turned it into a competition because we were trying to find a way to award scholarship dollars and not make it so much on the traditional grade point average essay. And so we wanted something a little bit different that was more inclusive to everyone. So we were using this in our teaching, and then we thought, you know what, let's turn it into a game. So basically what you do is you get a job, you get a person, and then you get a family, and everyone's different, and you get a job and a salary. And then during the game, you have to go buy your house, your transportation, your extras. And then the goal is at the end, for us, you have to come within a certain dollar amount. And then if you're not doing it as a game, you're trying to just teach overall money management. And so we do it in teams as well to make it more fun for the students. So we do it in teams of 3 or 4. And then collectively, their average has to equal X. So it is like my best favorite day to hear these kids talk. And every time it's the same thing. I got a bus pass for my wife, and I got the transportation, or we don't need that big of a house. And it's so endearing to hear them talk about it.
How many children are you, as your credit union, touching today?
Oh, I would say anywhere a minimum of 500. That would be like a minimum, probably over 1,000 each year. Because we teach each semester at each of our 5 schools, and then we do the Mad City for everyone at the end of the year. But each semester we teach a class. So we're hitting all those students in addition to being our student branches at the schools as well.
And this is all under the Dream Chasers label?
No, this is just all under sort of our high school branches and the Dream Chasers, yes.
Marcel, let's cut to you. Why the name change?
Oh, great question. So when Incent was created, it was created specifically for youth banking, right? And the actual concept, I think Richard slogan when he started the company was he wanted to provide a way to incentivize his kids to do chores and do tasks and things along that lines. And so he used the word incent as the kind of technology and the platform. After the acquisition, a key difference between just a youth banking strategy versus what we wanted to do, which was more of a life cycle banking strategy. We wanted to associate the name to be more related to the vision and the strategy of the company. So Nuuvia is a concatenation of kind of new, which is NEW, and via, which is past. So kind of a new path to building lifelong relationships is the kind of background on the name Nuuvia. And so that's what we decided we wanted to do and execute on was create a life cycle banking product starting with the youth, and therefore Nuuvia.
Now, Christine, what's in it for the credit union to reach out to kids?
Oh, there are so many advantages and opportunities reaching out to the kids. The first being, I mean, we started, as you know, as a schools teacher credit union, which anyone can belong to our credit union now. So we've always had a commitment in financial education. So the first is we found that the earlier you get education financially to people, the better off they will be over time. So that is the big motivation, is to make sure that we are walking with their, very, very similar to how Marcel said, we are walking them through the life cycles, and the life cycle has been very early. It's not now where you open an account for your child and put some money in it and leave it. These young people are active, and they're active at a very early age. And after we saw the whole 2008-9 crisis, we realized how much education had been lacking in this younger age group. So that's where we started with the high schools, and then we slowly moved down, to the middle school children. So that's the reason why, is because we feel that people will be better off. And if we're the partner, honestly, that walks through you through life, you're most likely to give us a first look. So when you're going to go get your auto loan or your car loan, or maybe you want information in that buying process and you want to talk to somebody, or you want it digitally, you're probably going to be put more emphasis on someone that you've worked with before. And so we want to be that partner that's been alongside you your whole journey.
You said it's relationship with kids to the institution are different. It's different from what it was years ago. Mm-hmm. And that reminds me when I was a little kid, maybe 6 years old, my father took me to an SNL and put some birthday money in it, $20. I don't know, not a heck of a lot of money. I don't remember that anybody put any more money in. I do remember when I was 21, I went and withdrew what was in it. And it wasn't a heck of a lot of money. And
it was like $21 at that time.
It was something like that. And if you said, I'll give you $1,000 if you could tell me the name of the institution, I'd say, no, you win. I don't know. I don't remember. I just knew I had this little savings passbook.
And, that's exactly. And it's about adapting to change and meeting people where they are. Remember the passbooks? When I started in 2010, I found some old passbooks where you used to put the quarter in. You put the quarter in, then you bring the whole piece in and put it into your account. I don't think most kids are even touching money very much anymore.
Yeah.
Well, that's one of the key differences, is that a lot of kids don't get any money, but they do get a debit card credit from a parent or something.
Right. And that's what's so beautiful about this product. And as soon as I saw it, that's what's so beautiful about it. And I'm just so happy that Nuuvia has now, that instance, now Nuuvia, because of what they're able to do, is exactly that. Now you're educating them in the same way. It's just not the same way. It's different, but it's actually the same. It's the concept of money. It's the concept of why you're saving, what's important about savings. And your parent can walk alongside you, which is also great. I mean, one of the great features, and this is a really fun feature, there's a feature in there where you can do a loan to your child and show them what it would be like to pay interest back when you're borrowing money from your parents. Not just always we're giving you money, or you're not just always earning it for chores. That part teaches you what it's going to be like later on when you're going to get a car loan, home loan, or anything else you might be financing. But you're learning that concept very early. Again, with no cost to you, essentially, because you have the learning experience and you're not going to go wrong very big at all.
Yeah.
Now,
Yeah.
Marcel, you just got a rave review. So tell me
Yeah, I
about the
love it.
product. Tell me about the product. What's Christine raving about?
If you think about today, most credit unions have youth accounts. Either they start with a savings account, some have teen checking accounts, um, and or both. And so when you start thinking about that, and how those consumers, that demographic, engage with your institution, if it's just a savings account, they're never going to engage. If they get a checking account with a debit card, they get a debit card, but they're not really learning anything by just getting a debit card unless their parents start teaching them or they take a financial education class in high school, whatever it may be. So what we're doing with Nuuvia's youth banking product is coupling financial education with real money application, right? So yes, you can learn about savings, but then you can go actually build a savings goal, right? Or you can learn about loans, and then you can borrow money from your parents, or budgeting, right? So we're really taking the two things that need to be applied together to actually understand how those kids' behaviors change. Because if you think about just the financial education side, and I've talked to hundreds of institutions, I asked them, how do you measure the success of your financial education program? The traditional answers are participation, right? So I had 20 kids. It could be a test at the end, like here are the concepts that you learned, and there's multiple choice, et cetera. But what I haven't been able to find with any institution is, okay, how are you measuring the impact of the behavior to know that this is actually working, right? Because if you think about financial literacy in the U.S., only 57% of the consumers in the U.S. households are considered financially literate, and that has stayed pretty consistent over the last 50 years, right? So although we're providing education, understanding how effective it is very difficult. So we see the opportunity to actually tie those two things together with the kind of the six big modules that we have, which is the financial education, that's learn. There's earn, which is being able to teach your kids about earning money, right? So giving them a task to do, paying them their allowance, paying them for grades, so you can basically give them opportunities to earn money. And then you have the spend side, which is now they have a debit card that they can associate with that money. And they're now understanding, hey, if I spend $10 on this, that means that I'm going to have zero left in my account to buy something else, right? There is a give module, a charitable giving module, so that kids can learn about charitable giving. There is a savings buckets where a kid can actually save up for whatever they may want or need down the road. It could be a bike, it could be a skateboard, the next video game. But as Christine mentioned, the kind of the crowd favorite is the parental lending module, where you can loan money to your kids and apply interest rates to that loan, and teach them about credit and the impact of interest when you're borrowing money. So those are the big modules, and we're trying to make sure that we tie those together so that kids are basically building better money habits earlier in their life, so that as they get to college, they don't go and immediately go apply for a credit card and then never pay it, because they've understood what it means to actually make the payments on the cards and the loans that you're doing. So that's the primary goal. It's really just to apply the financial education to actual real money application to teach kids better financial money habits.
Now, how willing are parents to be open about the family finances with kids? And I say in my family, I have no idea how much my parents made. No idea at all. Were we middle class, upper middle class, lower middle class? We were one of those classes. I know that. So we weren't rich, we weren't poor, but somewhere in there. But I couldn't tell you which one we were. We never talked about money, and money seemed like a bottomless resource. Not that we were rich, but I asked my mother for $5. She gave me $5. She didn't say, "Now don't ask again for 10 days." She never said that. Should have probably.
I had to work for mine, Robert. I had to mow a lawn, go wash a car.
I'm not sure it's a lot different in what the families, families are unique and families share differently. I think it's more about the families sharing and talking more about either what allowance you're getting, what you're earning, and how you're going to spend your portion. Then here's what I pay for my mortgage. No, here's what you are making, here's what you might be earning, and what within that capacity can you afford to do. And again, like these buckets, you're going to afford X amount. Are you going to save some of that? Are you going to give some of that? So I think it's more about the parents having the conversation and the ability also to have it digitally, which is faster and quicker, and how most young people respond, so that you're getting that piece of it, so that by the time you are more educated and as you grow older, you'll figure out where your family might be, economically, but all the while it really doesn't matter in the sense of you're learning how to manage what your income is, so to speak.
Yeah. And let me just to kind of give you some perspective on kind of how that's applied within the experience. The parent is opening up an account specifically for that kid, right? Where the money is going to go into that account. So anytime the kid, even if they start a job, right, they still have an account. It's a primary checking account. The parent is a joint owner in that account, so that allows them to still control the account but move money into that account. But the kid can also receive money into that account from grandma or Uncle Joe, whomever it might be. So they have a real checking account. They may not call it a checking account. Some call it a spend account. And now they have a debit card, right? So to Christine's point, it's about how do you help that kid understand how they need to earn money and what does money mean. I had a 14-year-old niece that stayed with us for a little while, and she had no concept of what money meant, right? She just saw me swiping card, right? And so anytime we'd go somewhere, she'd ask something, ask for something, and I'd say, okay, well, do you know how much this costs? Well, what does that mean, right? So it's trying to create that relevance of what money means and how does it help you, and also how can it also hurt you if you're doing the wrong things with it. So to Christine's comment, it's not necessarily about what I earn as a parent. It's how do we teach you what that means and what money means, and how do you actually manage it so that it helps you benefit yourself and your family and others, as opposed to just spending it willy-nilly without even thinking about what you're actually spending on.
Right. The important thing is learning that money is finite.
Yes.
Even for
Yes.
Elon Musk,
You hit it on the head.
finite.
Yeah.
His finite is a lot bigger than mine, but it's finite for him. It's and that's a lesson that's hard for a kid to absorb. I probably was 21 before I absorbed that lesson.
And I think too, it comes at different points, as like I said, when they're ready to absorb. So for example, another need that we found is we have a lot of high school students graduating, to college. Then they may have their accounts with us through college. Then when they're out of college is usually when they have their first, first or second job, sort of like their sort of grown up job. They have that job, and now they're going to be living on their own. So they have different things to consider that they didn't have to before. Okay, now I have to figure out how much do I spend on an apartment, or where do I live, or do I have to buy a car and car insurance now? So there's a whole nother point of budgeting differently at that age group. And one of the nice things about the Dream Chasers is it's now structured in a product that can help you through life's journey versus just at one point in time. And that's a great addition that they're bringing to the product, which I think is fantastic.
Yeah, and that really kind of ties back to that life cycle banking, right? So you think about a 6-year-old, what might a 6-year-old use in this application? One, it's digital. They get to create their own little avatar. Generally, it's going to be something along the lines of savings account, understanding what savings is. How do you actually save money? What does it mean? And how does it help you accomplish your goals? And potentially, depending on the institution and the parent, maybe a debit card, right? Because now they may want to go buy their next doll or a toy or whatever it may be. But at least now you're showing them that, hey, you had $20 here, you paid $5 for your toy. This is what you have left. This is finite. So you got to think about how do you want to save or spend this money based on what your longer term goals are. And then as you age, like a teenager, it's probably more the capabilities and features that are going to be used. Obviously, the debit card with parental controls, but also that budgeting, right? So you start thinking about teaching the kid about budgeting so that as they prepare to move off to college or their first job or on a mission or whatever it may be, that they need to budget their money. But you're able to teach them that within that application earlier than later, right? So it gives that parent an opportunity to help teach the kid, hey, here's how you need to think about budgeting the money that's coming in with the money that's going out, so that you don't you have your bills turned off or your phone turned off or get kicked out of your apartment or whatever it may be.
Now, do kids today understand cash money?
They understand cash money. Yes, if their parents are teaching them about cash and they actually understand what it means to earn, you can teach them about the cash money. Because, and I'll go back to my 14-year-old niece. I gave her $5 for, I'll call it washing the car, whatever it may have been, and she wanted to buy a pack of gum, right? And nowadays you can't buy gum for 25 cents anymore. It's like $3 for
What?
15 pieces
What?
of gum, right?
This is terrible news, Marcel. How can you share this with me?
Yeah. So, but here's the point. I said, okay, here's your $5. The gum is $3. That means that you're only gonna have $2 left. So, do you really want to buy this gum, or do you want to save this money for the doll that you wanted, which is $50, right? And she thought about it for a minute. She's like, okay, I'm gonna skip the gum, right? And she kept her $5, right? But that was an opportunity to teach her about, this is the value of money. It is finite, and you need to be thinking about, what are you trying to accomplish? What are your goals? What do you really want versus what do you need versus what do you want at this time? And actually, kind of holding on to that money for a little bit longer.
Now, can your app do what you just did with that girl? In other words, what you were doing was you were acting like a coach. You're saying, here's some options here. Here's your reality. This is what you got, and you want to do this, but then you can't do that. Now, can the app do that? Because I mean, that's great. That's great teaching.
Mm-hmm. Yep. So there are two components to the app, and Christine may have, I'm sure will have some additional insight on this. Is number one, the kid can set up for a savings goal, right? So if they have a savings goal, they can look at their savings goal and see how far along they are in that goal. So if it's a $20 for a doll, and they have $5 in their account, they can see, okay, I need 15 more dollars, right? So that's one component of it. The second piece is that they can see the balance in their account. So they can open up their phone, they can look at the balance and see that they have $15 in their account, and they're looking to purchase something that's $5. Again, simple math. Okay, if I spend this $5 now, that means now I'm $20 less than what I need to do to get my doll. So those components are kind of built into the system, so that they can see what their balances are. They know what they're spending, and they can determine if they want to actually buy something based on what's in their account and what they're looking to do longer term. Christine, anything to add to that?
I would say, and vice versa, the other way too. You can approve transactions. So the other flip side of it is that you're going to do a transaction and you have it set up to approve over X dollar amount. The parent sees that and goes, okay, you're not spending, $30 today on X. I could see where you are. I might be denying that transaction, and then I might be sending you a message, hey, that's a little out of your range. Look at what you have. And you could send the message back and use those as teaching moments too. So that's another way that the app works in a different way, but basically accomplishing a very similar goal.
Christine, how do you keep the kids engaged? Kid hits the first obstacle and it's, hell, I don't like this game anymore. It's not working for me.
I will say it is a constant challenge. Anytime you're working with the youth and trying to understand, generationally what motivates them. We're very fortunate because we have advisory council, we have our high school students, we have middle school students, so we get to engage and see what the buttons are, so to speak. What incentives get them to react, what games get them to react, and what truly motivates them. It's different across the board, but it is constantly changing. It's just a matter of us staying up on top of it and having the tools like this that we already have in place. Now, how do we use them a little bit differently to keep them engaged? And sometimes maybe it's just trading up. You might find out, oh, here's the content. So for example, we originally had crypto content and modules in the app. And then we took them out, a couple of years ago because it was all no crypto. Everything was, very bad about stablecoin. Now it's all like you got to get it back in as fast as you can. So it's also about what keeps them engaged is making sure that you have the relevant content that they're looking for at that point in time. So that's a piece of it that I think keeps them engaged.
And I think another piece of this is really around kind of gamification. So one of the ways that we try to drive engagement with the kids is through this gamification, in which if they complete a specific goal. So they set up savings goal and they achieve their goal, they get a trophy. If they watch a particular educational module, they get a trophy, right? So we're giving them trophies, and within that family, if there's more than one kid, you can see your number of trophies versus other members in the family. And then across the entire credit union, you can see your ranking. You don't necessarily see other kids' names, but you can see the ranking where you kind of sit in that space. So, trying to leverage gamification as a way to drive engagement beyond just them just spending and earning the money. Right.
And good behaviors that are fun. I mean, they find that fun. It's the world that they're growing up in. And then when it's fun and engaging, they're more likely to then continue on those behaviors that help them in the future.
Now, is this bringing more families into the credit union, Christine?
Yes, I would say yes, because we have this program and we have our Little Brownies debit card within this program as well. You can have any debit card. You can have our Little Brownies debit card. You can have regular Cardinal debit card. We're getting to launch a few different ones too. So you have this selection of cards to use. They all work the same within the module. And each opportunity is now we're getting exposure to a new group of people and showing them what we have. Now we have this debit card, kind of like what Marcel said. We're not just giving you a credit card or a debit card. We're giving you this with all these tools. And so as we're introduced to all these new groups, they're now seeing the value in this product for their children.
Yeah, I have some data. So one of our credit unions is fairly they're all in on youth banking. Desert Financial out of Phoenix, Arizona. They're about $9 billion in assets, and we did a case study. And here are a couple of kind of key data points to the question that you're asking. Adoption rate amongst the existing youth accounts reached 30% in the first 6 months. So they have a 30% adoption rate within their existing youth accounts. They have increased their number of youth accounts by 32% over that 6 months. They have increased the level of deposits, 22% increase in deposits over that 6 month across all of the youth accounts. So you're looking at kind of the one element of engagement, that's retention, acquisition of additional youth accounts, but it's also acquiring new parents who were never members at the institution to open up accounts because of this kind of call it the youth banking experience. So now a parent who comes in with 3 kids has to open up 4 accounts, right? Their own, where the money is going to move into to that parent or into the parent's account from the kid when they're borrowing money. And so there's that interaction, but it's drive. I believe Desert was somewhere in the 2 to 3% increase in net new members because of this service being offered in their community. And right now they're the only one in the kind of Phoenix area to offer this service, and they are heavily promoting it, which is driving that level of adoption, engagement, and member acquisition.
Well, I think I live in Phoenix. They're one of the biggest credit unions around here. I'm surprised other credit unions aren't looking at their success, saying, I got to hop on this bus too. So
we do have some prospective clients that are in the Phoenix area that are now looking to launch youth banking.
Now, Desert also has a good reputation of being a pretty solidly run organization. So
yes, yeah, absolutely.
Now, a lot of parents would be terrified at the idea of giving a kid a credit card, right, Christine?
A credit card, yes, but a debit card, no.
No, debit card, that's what I'm getting at. Credit card, a credit card has a limit, $500, $1,000. For all you know, the kid goes out and buys $1,000 worth of baseball cards today. And who's going to wind up paying for it? You're going to pay for it. I mean,
but we've seen a lot of success. It is way different today. We've seen a lot of success. Most of our high school students start off with a shared secured card, which the parent will put on deposit, say $500, and then you have a $500 limit or $1,000 or $2,000, whatever, it might be. We actually see very responsible behaviors with those credit cards.
Kids today are really weird.
I think maybe there's some things that resonate. Maybe they heard about the 80s and all the things that happened with the credit cards in the 80s. So they have at least an ear open, and they also want to build good credit. So when we give credit cards and we teach about credit and usage of credit, and what it means to be optimal. Kind of like, I don't want to say gamification, but if you want that high credit score, you have this credit card, here's how you're going to get that high credit score. They see that as an opportunity. And so they, for the most part, they are very cognizant of how they're going to get there. And now they get such good feedback so quickly to see if they're on track. So they know about usage. They know if they get the credit card, 30% is only what they should spend on the credit card, that they need to keep that available credit because it affects their credit score. We're teaching that. It's in the modules that we have in products like Nuuvia. And they know that, and they actually are thriving more because of it, I believe. And they run less into those mistakes that their parents probably did make and may still be making.
Well, how's it branded? Is it Nuuvia or is it Cardinal or what?
That's the beauty of this product. So it's branded, ours is branded a Cardinal card. So when you get it, you're seeing Cardinal. It's more branded Cardinal, which makes it so special, and then powered by Nuuvia. So we can give the partnership the attention and recognition that, hey, we're partnering with this great company that allows us to have the engine to do this. But you're seeing the face of Cardinal. When you're going in the app and when you're using your card, it's all Cardinal branded.
Now, Marcel wants to leave me. My heart is broken, but at least you're not leaving bad. At least you're not leaving bad. That's it's when the guests leave mad. I get well.
No, all good. Yeah, it's actually with a friend of ours, Desert Financial. We're actually having a similar discussion with them. So
super. Thank you for your time, Marcel. Always a joy to talk to you.
Absolutely, pleasure, Robert.
So, what else are you going to tell me, Christine, about your youth banking?
I will say that I just want to just reiterate the branded card because I think that's pretty special that we can have the card. So that's why we can have different cards. We can have the Little Brownies card. We can have the Cardinal card. We can have the Cleveland Crunch card. I think that makes it fun and interesting for the youth. And really, I think we've covered everything that I wanted to make sure we had in there about that, especially with the parents being able to engage just how much or how little they want. And the fact that Nuuvia is growing up as a company, I think that's fantastic. It's not just for one segment. We can now have an offering and be in this space within the same app. The look and feel is the same, but address it a little differently for each age group, which I'm very excited about. Because like I said, the older students are now looking more about credit. And then once they're graduating from college, they're looking more back into the budgeting. I remember something, but now I really have a concrete example of what I need to do at a much larger scale, and being able to walk through that with them with the journey is great. And they put a lot into the product, so the look and feel of it is so modern, simple, clear, really nice to be able for us to be able to deliver to our members just as the other credit unions are as well. And allowing credit unions, we collaborate, credit unions collaborating, allowing us to be in this space so we can be equally competitive for our members in the future.
Before we go, think hard about how you can help support this podcast so we can do more interviews with more thoughtful leaders in the credit union world. What we're trying to figure out here in these podcasts is what's next for credit unions. What can they do to really, really, really make a difference in the financial scene? Can't all be mega banks, can it? It's my hope it won't all be mega banks. It'll always be a place for credit unions. That's what we're discussing here. So figure out how you can help. Get in touch with me. This is rjmcgarvey@gmail.com. Robert McGarvey again. That's rjmcgarvey@gmail.com. Get in touch. We'll figure out a way that you can help. We need your support. We want your support. We thank you for your support. The CU 2.0 podcast.